Was how do I see venture evolving? And I think venture capital is shifting in 3 ways.
3.
Okay, 4 ways.
You bought himself some time to come up with a 4th.
Yeah, I know, right? 2 ways. So one is, so it's changing and it's not changing. It's not changing in that branding really matters. And I think people misunderstand the degree to which branding matters. And if you look at some of the biggest names in venture capital, they all have blogs. Fred Wilson has a blog. Mark Andreessen for a while had a blog. Ben wrote a book as well as has a blog. Like you just run through the list of the people that you know and identify on sort of a first name basis. Oh, it's Reed. And you're like, oh yeah, he has like 3 books and he was blogging and he did all this, content marketing effectively. And so, and then you know of people that haven't actually done great investments, but you know their name because they've sort of done content marketing. So I think branding matters immensely. So that's point 1. So that doesn't change, but it's one of the things that I think is important for venture. Number 2 is you do see this emergence of mega funds. And by mega funds, I mean more like Sequoia and Andreessen raising a $2 billion fund and all these funds getting bigger. And I think in parallel, you see sort of specialization down on the other side. And so a lot of venture sort of stretching into these mega funds and then niche or verticalized funds. And then I think everything else is getting squeezed in between. And I'd actually consider Benchmark a niche fund, for example. It's a $400 million fund, but they do one thing very well, which is mainly just Series A's. And I think more and more you're seeing that segmentation. I think the second thing is it's becoming much more distributed. And that's because of all the scout programs. It's because of things like AngelList. And I think there's a couple funds now that have that thesis. But I do think that we may see more and more of that over time. Some of those models I think will be very unsuccessful, some will be successful, and we'll see what impact that has.
Can you just define Scout program for people?
Oh, sure, yeah. A Scout program is basically where a VC will give you money to angel invest effectively on their behalf, and you split the upside with them. And so it, there's one Scout program that apparently has 50 or more people in it, right? And so it means that there's a lot of people that have sort of access to what, from a venture perspective, is small amounts of capital, right? For a person, it's a lot, but so a VC will give somebody $100,000 to invest in like 4 companies or something.
And it's often like the founders that.
Yeah,
of that
it's
fund.
founders, or increasingly I've seen it be, different VPs, or in some cases product managers or engineers, and so I think it's sort of trickled into a variety of different levels. And a lot of people that I've talked to who are scouts, unfortunately, actually view that money as just free money. They're like, oh, it's optionality. I can invest it wherever I want. It doesn't matter. It's how I learn about investing. And what they don't realize is that anytime you start investing in things, if you ever want to join a VC or raise a fund, you're creating your institutional track record. And so a lot of people may actually be shooting themselves in the foot by being scouts and then just kind of throwing the money around. So I think that'll be an interesting thing to see how it shapes up. One thing I would do if I was a venture capitalist, so a lot of VCs I know are ongoing looking for partners, but they just can't find anybody good, which is really weird because it's an incredibly lucrative job, right, for people to do. And they say, well, I can never meet people and track record and this and that. And you're like, well, how can you identify whether somebody's good or not if they don't have a track record? It really limits who you can talk to or look at. And so if I was a venture fund, I would basically tell my scouts, the thing that you win at the end of this is a job with us if you're a firm that you actually want to join. And I just run it as a competition and see who did the best job. And I think one of the big myths in Silicon Valley, at least on the venture side, is that it takes 5 years to know if somebody's a good investor or not. And I think at least for angels, it takes about 18 months or 24 months. You can look at their portfolio and they've done enough investments usually as an angel and you're like, okay, this person has a good hit ratio or they have a terrible hit ratio. So I would just run a bake-off if I was running a scout program.
It's pretty sizable. People get really excited about like $1 million lottos, and that's,
Yeah.
The prize here is like way bigger.
The prize is big. And the one other thing, that I'd do if I was running a scout program, and sorry, I know that wasn't the topic, is I'd actually make people invest their own money alongside. Because if you have skin in the game, you're going to think about it pretty differently than if it's just optionality. You're like, oh shit, I don't want to lose that money.